recording button right there. Okay, guys, I'll now formally give you guys an invite and welcome you guys and wish you a very good afternoon and thank you for attending today's live Monday webinar by myself, Kenny Simon, via Allbex, and we are here located in Limassol today. Weather-wise, not too bad at all, but the economic weather, of course, and financial markets, capital markets, you know, it's quite topsy-turvy. Lots of things are happening. I mean, we are looking into loads of events tomorrow. I mean, of course, not loads of events. It's the event tomorrow, the presidential election, of course. But just to remind you guys, I've got the coverage on gold today. Of course, we want to pave that, have that pave the way for us to know a little bit more about precious metals, especially silver and the others. But we'll go on to the US Index just to give you an idea of what US Index is doing, comparison to 6 pairs, and a little bit here and there about some fundamentals as well. And we'll do that. Okay, so let's get going. We're looking now at the moment, as I've mentioned, a bit of coverage or special coverage on gold. So we're looking now at the gold on the daily chart. Just would like to show you or remind you again, for those of you guys who are new to today's webinar, I would like to welcome you. Thank you for attending today's webinar. And I trade patterns, so I would like to share with you guys on patterns I have spotted, give you a bit of an idea of the direction of these patterns as well. So for you guys who have followed me throughout the week on Mondays as well as Wednesdays, this is the Z-like pattern. It is a bullish type pattern that has been drawn for weeks and weeks ago. I think it's almost a month plus, if I'm not mistaken, almost 2 months, if I'm not mistaken. I do apologize for the sound around me, but we've just we were on the trading floor itself, so it gives you guys a chance to focus much more. So here we've got the A right here, B, C, D that was initially drawn, and I have given you guys, I'll give you guys a bit of a basics, but giving you guys a bit of an indication of how a Z-like pattern would usually move. Now you've got that red line right there, right? So I'll just label that as A, and then I've got here B, okay? Then you've got C and D. All right, just a summary, what I'm looking at the moment is based on this pattern. Usually if it ends around D, basically this is the move that we are looking at. Okay, and we have expected this move, and now it's showing on the daily chart itself. We've got more, I would say, not a conviction per se, but you've got more hints that it has corrected here. From the upward move, it has corrected very close to the moving the average, the moving averages, the exponential moving averages. So we're looking at more possibility of prices to come down this way here, correct itself, and then make a sort of move upwards. Okay, and that upward move would look into this as the short to medium term target 1274. But as of now, we're looking at possibilities of the goal going downwards to this area here, and this area here is between 1233 to 1212 area, as you can see the price right there. Okay, so this is the sort of what we're expected on the daily chart, but of course shorter term, shorter time frames would give you that correction, and then again prices would proceed downwards. Now we're looking at that possibility as well with the fundamentals. As you guys know, suddenly yesterday we have got some news on the email by Hillary being it's not classified as a crime anymore, and suddenly we've got all the shoot up in the Mexican peso as well, and then the US dollar as well rose, and things like that. So now to marry that together with what we are looking at, the gold at the moment, we're looking at possibility of a downward move to this area here. But I'm not saying that that is a total change of trend. I mean, if we're looking at a Z-like pattern itself, you've got, this is called the bullish Z-like pattern, like what I've drawn here in red, right? So you've got your A here, and then you've got B, C, and then D, right? So this D area, usually you've got a bit of a zone that I've drawn here. That's my zone here of where it could come downwards, okay? But the thing about the Z-like pattern is from C to D, as I've mentioned before, it's usually in the in the form of an ABCD type pattern. Okay, so that's C actually. Within C to D, you've got an ABCD like movement usually. So you could easily project that, look into C, where C have actually landed using Fibonacci, and then look at where it would project that, and we'll do that together in a minute. Okay, so let's do that. Now with a Z-like pattern like this, an ABCD, this is a bullish type pattern. Okay, a bullish type pattern. Let me just get rid of my give me a second, guys. I'll just sign out from my Skype so it doesn't bother us. Okay, oops. Alright, so the ABCD pattern, as you can see, this is a bullish type ABCD pattern, which is projected or forecasted to end around D area here. Okay, but then it'll make a sort of upward move. That bullish-like pattern is called a bullish-like pattern mainly because of that biggest move is to the upside here. Okay, so let's do that again. Let's just wipe all that drawing out, and let's just look into this move here. Okay, let's do this, look into this as an ABCD type pattern. So you've got, like, say A here, B, C, but whether A would be here or A here, a lot of you guys would question me. It all depends on Fibonacci itself. Okay, so with the Fibonacci itself, if I pull A from here right down to the B, then I've got C right there, bang on the 50%. That's a good sign. Again, I could do the same with this one here, and that one gives me 61.8. Okay, and for me personally, I like using the Fibonacci, the 61.8 or the 78.6% ratio. Okay, so I'll pull that A to B, and the question is to know where has C point landed. Okay, so let me just clarify that. If I'm looking at an ABCD, I'm looking at an A, B, C, and then a D somewhere there. Okay, and that length there, the first way to predict your D is your AB equal to CD. So we'll do that together. Okay, and let's look at that. And if I pull that one there, as I've mentioned, 61.8, not too bad. What if I just do that lower? It's actually nicer there at 61.8. I mean, the closest that C point could, touch on the 61.8, if it's on the dot, or you've got least pins jutting out or things like that, that would make the C point quite, I would say, probable, a nicer ABCD pattern. Okay, so if I just use my lines now, and I'll just grab that A there. Okay, instead of that one there, that one there, or that one there, I've picked that one there because my C has landed very nicely on the 61.8. So I'll regard this as my A, and then my B, and I'll draw my B to C now, right, like that. And for me to predict the C to D, I simply double click that one there, and I do it this way. Okay, and then I've got another probable TP area right there, which adds up to the zone here as well. Okay, so then I've got A right down to B. Okay, so that's my A, B, C, D. Now, because it's 61.8 right there, you want to pull your B to C and look for 1.618. So I'll just write that down for you guys. So if your C equals to 61.8 Fibonacci ratio, that's your retracement ratio, then your D, okay, could potentially be 1.618, and that is your retracement. Okay, sorry, that's your extension. Sorry about that. Extension, Fibonacci extension. Okay, right, we ignore that one here. Alright, extension. Okay, this one here is retracement. Okay, RET. Alright, retracement. So you've got your retracement at 61.8%, and then you got your extension at 1.618%. So let me just show you that. Now you'll take your B to C, that's your B right there, right to C right there. Then you've got 1.161.8, so you just do that as well, and you'll see that you've got more lines now added to the ratio. Okay, you can easily take that away, clear the screen as well. There you go. So you see you've got some zone, edit zone based on this. Now this one gives us an indication that if at all we have got US dollar strength. Okay, if you've got more dollar strength, then you want to look at the possibility or the probability of prices falling more for gold, and that's the zone there. So let me just line up that zone now. You've got a new sort of extended zone. Earlier on you've only got that two lines, 1 2 3 3 and 1 2 1 2, and now with the ABCD is giving us a probability or even a possibility. It all depends on prices for the US dollar. The stronger the US dollar is, then the more the possibility of prices coming downwards for gold. Okay, so let us just do that. Now that's your zone right there. Okay, that's your potential. We call it the PRZ zone as well as the TP area for you. Okay, so here for those of you guys who want to ride along the bearish move here and you would like to short this gold trade, and the best way to do it is to convert this ABCD pattern into a geometric pattern by simply combining A to D and look for the centroid area, which is right there. Okay, that's the best part. That centroid area has mirrored the initial centroid area for one of the ABCD too. So it's a good sign. So you've got your ABCD right there. Okay, at 1273. So 1273.93. Let's say if we just ignore the 0.93, you want your prices, your ideal prices for shorting should actually be under the 80 Psych number here, because 1273, just about 7 pips above, is your 80 Psych number. So 1280 has to, if you are looking into shorting it, it would be best to actually short, of course, under that centroid area, but then this centroid area points out to the 1273 price, so that let me just see, that 1273 price is closest to 1280 price. Okay, so you want to sell, you need to sell under that by at least 10 pips. So 70 would be an ideal area to look into your shorting opportunity, and aiming at either 1233 right down to the 11 or 1200 area as your potential TP area, anyway within this zone here. Okay, but you want to always adjust the psychological number. So here, if at all the 1200 is your Psych number there, then before reaching this number here, you want to actually take profit. So you want to take profit at 1210, at least 10, 10 what do you call it, ounces, the price wise, $10, sorry, above that 1200 area. So 1210 would be ideal for your take profit. 1210. Okay, so ideally based on the principle of psychological number itself, you've got it pointing there, and then this one here points to your entry potential, probable entry area based on the principles of geometric patterns as well, based on that centroid that I've just pointed out right there. Okay, that's your centroid area. Okay, so if you attach that one there just like that, for example, you've got a perfect sort of angle-wise based on Archimedes' theorem, as well on the how do you call that, shapes, geometric shapes as well. So that's why I call it geometric patterns trading. Okay, so this is how you go. If you extend that line there all the way down, then that could also provide you with a channel, okay, a price channel, and usually by drawing that itself, we don't really need the tools right here. We could easily just use this kind of drawing very simply to provide you with support resistance line as well as channels and all kind of price action sort of tools. Okay, so this one here, if you look back all the way, you could see that this is indeed a very, based on that centroid area, is indeed a very significant support resistance area. Okay, so this is gold on the daily chart, just to give you an idea overall where would it likely go to first before that correction to the upside, because at this moment of time there's been, thank you, been a lot of delay. I mean, investors are talking about it and asking why is prices for gold not really up as yet. There are many reasons for that. Of course, it's got a lot to do with manipulation to some extent, manipulation of price of gold, but the manipulation to a large extent has got to do with how much paper gold available in comparison to physical gold, and that is what's the mix-up is about. And not only that, economically, of course, you've got the central bank's intervention as well, and there's a lot of tug of war, not only between prices of currencies, but tug of war between deflation and inflation. Okay, so you would need to understand this, that the central banks, they don't really like deflation. I mean, we are in a deflationary mode, but we're not, but the States especially is not in deflation per se, but they are in deflationary mode. They're showing some signs and elements of deflation. So the moment they go into real deflation, there'll be huge problems. But that's hence a reason in order for them to be able to manage their own government debts and the debt to GDP ratio and everything else that has got to do with debt, it's best if they go into inflation. Okay, so hence the reason you're looking into more inflation. So inflation, I just want to let you know, when you see prices inflate and then you see the dollar rise, doesn't really mean that everything is just great or in the economic sense. It doesn't mean that at all. In today's world, it's very how do you call that? It's a mind trick going on, whereby they're tricking us in believing that inflation is giving us all the signs of a economic recovery and great stuff. But actually what happens is that the dollar value goes really down. Your currency value for whichever country you're in goes down, and it actually fits the benefit of the government, because the government, they are in debt and they've got more and more. The more they have debt, and the more they want to cover their own what do you call that, benefits with that, in order to cover their debts or repay the debt and all that, they need inflation, because when they rise up prices and all that, the actual value of their debt actually goes down. So it's all about them, it's all about the government as well. So this is basically the reason for government liking or loving inflation as opposed to deflation. Deflation is total opposite. It's not good for the government, it's not good for central banks, but inflation is really good for them. Not good for the public, of course, but good for the government. Okay, so I just thought I need to clarify that for you guys between deflation and inflation, and its connection to currencies and gold's value as well here. Okay, because the coverage is on gold today. So here we've got the daily chart covered here. Okay, let's just look into some medium term as well as short term on the gold. And if I erase that one there, as you can see, you've got potential downside, but again, it's a bit too early here at 1287. You can see that the price is there. If you take the decimal off, from the decimal itself off, and you're just looking at the 1287 price, 1287, you're looking at quite close to the psychological number, so, or the psychological level. So you would need to still wait at this moment of time for prices to depreciate further in order for us to get a better confirmation of more bearish play for the gold. Okay, let's look into what's happening at the 4-hourly chart. Okay, let's go there. Now, right after we've gone through with gold on the 4-hour and the 1-hour chart, or even shorter time frame, I would like to then bring you guys across to the USD Index so that we can then look into the position, the status of the dollar. Okay, because we would need to know and get a better idea on the dollar strength for us to get a better idea as well for gold strength as well as the other currencies. Okay, so here itself, I mean, for the 4-hour chart, you can see that clearly. If we take that away, you can see that clearly as an ABCD pattern. Then you've got more. You could see that the angle and the play of the candles itself, like price action and selling power, is dominating at the moment. But here you've got a bit of a challenge based on the 4-hour chart. Here we would need it to cross under all the three lines there. These three lines are also showing a bit of uncertainty. They're traveling not not giving you signs of bullishness or bearishness, but a sideways 3 o'clock type angle here. Just the lines is the three moving averages. The three moving averages that I use for those who are new are the exponential 50 exponential moving averages, 100 as well as the 200 exponential moving average. Okay, they're called EMAs for short. So they need to be under all the three lines to give me more an indication of more selling power, and only then we would be able to look into more what do you call that, shorting positions or shorting opportunities. Now that's why it is confirming that line there, the central line there, because once prices do go under this line here of 1273 or even below like 1270, so then it's under would look like it would be under the three lines anyway, so that would give us a better shorting capability or opportunity for us. Okay, so if we go on to the 1 hour chart right there for the goal, again, let me just erase that. Now here itself, just by zooming out, you could see lots of selling power here, and that is giving you an indication of more selling power. And once that selling power there, that candle there have actually closed there, and once it's closed there and you've got more how do you call that, candles testing that area, as you can see, when under that that big candle there, and then it tested there. So now we're looking at this area here as resistance. Okay, and that resistance there is has become even stronger. Why? Because if we look into this area here where prices are at, that was previously a very strong support area here. Okay, so now that support has now become resistant. Okay, so that resistance now is carrying prices below that belt line there. Okay, below this area here where prices have actually closed as well previously here for the selling candle there. So now we're looking at support becoming resistant, and then it's dominated by really big selling and buying power as well, and that is a good sign because you've got strong support here, pushed up prices with long strongish candle, but that one there has pulled prices down with strong bearish type candle, and that's a good sign because then we've got strong support has actually become strong resistance, and that's actually a good confirmation to have that there are more probability and possibility of prices heading downwards for the goal on most time frames, as we have checked on the daily as well as the 4 hour and now on the 1 hour. So we've got more selling pressure expected for gold. Okay, so if that selling pressure persists, then we can then see to the success of that Z-like pattern to the downside to reach our target at D point. Okay, because we've got A, B, C, D. So we are trading now from C to D. Okay, and that C to D move, it's looking like it's giving us, I mean, the market's giving us more probability with the help of what's going on fundamentally with news, with the position of the dollar, with what's going on just the eve of presidential election tomorrow. Today is the eve, the 7th of November. So we are looking at how the market's marinating all that and showing it to us or reflecting that onto the charts at this moment of time. Okay, so here let me just point out a couple of things that I've noticed here on the gold 1 hour chart. Let's just erase that. Now here we could, I mean, you could easily look into, for those who trade chart patterns as well, I mean, there's a lot of tops there. I don't know whether it's triple top, quadruple top, I'm not sure because I don't really trade chart patterns, but I mean, based on these theories itself, I mean, some of you guys would look into maybe a head shoulder, maybe a double top or triple top, but whatever tops they are or pattern that you see from the classification or category of chart patterns itself are giving quite good downward sort of bias for gold. Okay, so this is what we would need to look out for and look at price action, I mean, looking at price action itself now on the 1 hour chart, we're looking at prices at 1286, and then we're looking at the picking up of bears or sellers at this moment of time. But here you see why the prices there is sort of slowing down and thinking, and you could see that prices is bobbing up and down and not really giving you that strong momentum downwards, mainly because of two things. One is you've got the psychological level there. 1286 is really close to the 1280 area, but also at the same time you've got that dark blue line there, and that dark blue line represents the 200 exponential moving average. So you see you've got challenges there. So hence the reason you don't see a straight down fall of prices straight away, usually at this level. And this level here, you've got the price really close at a psychological level, like I've mentioned. You've got it at the 200 moving average, but then if you look left, you could see that's one of the reasons as well. You've got all these support resistant areas as well. Maybe if we look back, you could actually see that this area may have been a significant support or resistant area that has been really strong for it to be broken through, and only through really long bullish or bearish candle. Hence the reason you're looking at this slowdown of price, thinking and things like that. Okay, all right, so we've got a bit of a coverage now for gold, so let's just look into the other opportunities with the other currencies and more confirmation on gold's position using the USD index. Okay, but just before that, let's just go on to the very quickly on the 15-minute chart, just so that we can look and further confirm on any shorting short-term shorting opportunities for gold as well here. Hence the reason I'm looking to the 15-minute chart here. As you can see, you've got A, B, C, potentially D downwards as well, and then you've got that here itself, you've got this longish candle here. Now here, let me just draw that out for you. Just at a glance, me looking at this here, this candle here represents the pole of a pole flag pattern. We've got something called the pole and flag pattern, and I'll just draw that out for you. We've got more and more confirmation via different types of chart patterns, whether they're harmonic type patterns, geometric type patterns, or even just chart patterns. Okay, chart patterns are the ones that you would normally hear about: double top, double bottom, flag pole. All these ones are categorized under the chart patterns category. Okay, so here I would then look into this one here as my potential pole area. Okay, and that channel up right there would actually be my flag area. So I've got, this is called a bearish flag pole flag pattern. Okay, so what that usually means is that once it breaks out and it's got more capability to the downside, as big or as much as this fall right here, because we could equal that length of pole to the length of that breakout there. Okay, so all you need to do is you could draw that and see that as an ABCD too. Okay, so let's do that very quickly. Okay, so if I do that here and regard that as my A right there, B right here, I could see that it's not too bad. It's quite close to the 50 Fibonacci area right there. Okay, so if I take that length of AB of that pole, the length of the pole, and I put it right there, then I've got a bit of a probable TP area that at 1278 based on the 15-minute chart. So you can always trade in stages, okay, on the shorting side of things for gold, but this is how you could actually trade. You could look into various type chart patterns across different time frames to match that up together. But from most of the, I would say almost all of the chart patterns that I've seen in various time frames for gold is just giving us the same direction to the downside at the moment. So that's a very good sign. Now when you've got more patterns and you've got more confirmation of a downside, that increases your probability. Okay, that increases your probability, and that would actually then reduce your risk. This is what's key. Okay, this is what's most important here, right? Okay, so that's your 15-minute chart. Now, just before that, let's just before going right to the USD index, let's very quickly look into the 5-minute chart here. Okay, and that almost confirms it again that you've got significant resistance, okay, and you've got more selling power, more selling pressure, as you can see. Look at that. That's really strong resistance right there, okay, and it has not only met across a similar type of level, but it has actually found resistance quite on the dot of the 100 exponential moving average right there. Okay, and that's a very good sign. So that again is pulling down prices for gold. So here itself, as you can see, I go across patterns, I go across price patterns, and everything else is just pointing to the 6 o'clock sort of direction for gold, meaning downside bias, bearish pressure, selling pressure for the gold. Okay, so this is what we get, and this is good confirmation so far for gold to the downside. For those who are bullish the gold, you may be right in a direction, but in terms of timing, it's probably best for us to give it a bit of time for it to go cheaper, go lower before it has that capability of a big rise up. Okay, it's just a matter of timing as well for gold. Okay, all right, guys. So let's just further confirm that. As you can see, my focus is the risk aspects of things and looking for confirmations for whatever that I'm trading. So this is highly essential to maintain consistency in your trading. So if we go back, if we go to the USD index. Now, for those who are not familiar with the USD index is an index that compares the dollar against the US dollar against a basket of 6 other currencies. Okay, so these are all major currencies and currencies that have got loads of significance to the movement of the US dollar. So it's best for us to compare and look into this USD. Now we're looking at the USD index on the 1-hour chart, compare to other 6 currencies. So let's just look into this one for now, and I would like to first give you an indication based on the W-like pattern that I have spotted some time ago on the USD index based on the daily chart. Now this is why I would take this away first so that I don't confuse you more. Let's look into this as an ABCD pattern. Now this ABCD pattern, I've numbered it as well. The waves within this ABCD pattern, I have numbered it based on the principles of Elliott wave. I don't trade the Elliott wave theory at all, but I find that numbering it sometimes gives us a bit of an indication, a bit of a clearer picture. Okay, so that's why I've labeled that as 1, 2, 3, 4, 5, and usually if it's ended based on the Elliott wave theory, if it ended at 5, then you've got a possibility of prices doing this, and then this. So an ABCD movement. So hence you could see there seem to be a bit of an appreciative price. So they may be going up somewhere, and that makes my C, and makes my D here. That's my A, B, C, D again. Okay, so that's usually the pattern that is formed at the end of the number 5 wave. So all these is your wave. Okay, your wave 1, wave 2, wave 3, wave 4, and then wave 5. Okay, so usually at 1, 2, 3, 4, 5, and then it makes this. That's based on the Elliott wave theory. Okay, so this is what I could see in this area here. Okay, and this is just one of the elements that I use to confirm, and it's not something I use to predict the market per se, but here once I've attached this big fall right here all the way down here, then I've got a W-like pattern, and the W-like pattern is a bearish pattern, which gives me again an indication that once it arrives here at the D area, then I'm expecting a fall. Okay, so again with the USD index here on the daily chart, we're expecting a fall, but a fall on a W-like pattern could be at the minimum of 50%. Okay, 50% of that 4 to 5 leg, or C to D. This is your C, this is your D. Okay, so 50% is usually about an area that you can target or have it as your TP between this top here and that bottom there. Okay, so here, so let's just check one thing. Let's just see to what level is the price at the moment, or what level has it actually stopped. Right there on the dot there, just the body of it here, as you can see, have actually stopped at the 50 exponential moving average, which is a good sign. And right after that, you could see that there's a shouldn't price upward. So let's just check that now. Let's look at where has it actually landed, pulling it from C to D. Pull your Fibonacci here, Fibonacci tool from C to D, and look at where has it actually ended right there. Okay, so I'll pull my Fibonacci ratio right there all the way up here, and as you can see, you have got it minimum 38.2, and usually it's close to 50, around 50 or so, and you can still take that there because it's got challenges here by the 3 exponential moving average. So here is giving you a bit of a move upwards there. Okay, but here I would like to point out another thing as well. If you guys can see that, I just would like to draw this Z-like pattern that I see it happening as well. You've got that A to B all the way up here, B to C, and then a D right there. Okay, so that length here could be equal to that length there. Okay, so let me just do that once more. Perhaps a different color trend line there. Let me just change that to perhaps purple, nope, something different. Okay, oh nope, sorry about that. Okay, there you go. So if I take that, oh no, let's start A to B first. Okay, let's take that all the way up here. As you can see, it's quite close. Oh, did I do that right? Yes. Or we could take that body or that wick right there. Yep, it's right there. So if I start that again, we'll take that all the way down. Okay, it's not really equal, so let me just adjust that. AB equals CD for the Z-like pattern I'm doing at the moment, just to get double confirmation, to get another confirmation of whether or not I'm looking at the USD index or the dollar strength to be to the upside or downside, because this is important for me to also connect that with gold's movement, expected gold movement, as well as the other currencies. So this yellow, if you guys could see this clearly, that is the yellow Z-like pattern. It's a bullish Z-like pattern, which actually gives me an indication once it reaches the D area. Okay, let me just label that out for you. I've got my A right here. Okay, then I've got my B right here, and then C, and then D. Okay, so that ABCD pattern is a bullish pattern. Once it ends around here, I'm expecting it to go upwards, and this is what's going on at the moment. Okay, what's going on with the ABCD pattern based on the lazy Z-like pattern here is an indication of dollar moving upwards, and this is exactly what's happened. So again, we're looking at a potential rise of the US dollar at least 50% between this area here. So you see it may be weakening or so, but then looking at price action itself, you got 97.68. Okay, 68 to the upside, closest psych number is 0.80. Okay, so if it were to move more, you're looking at more chances of the USD index to go upwards towards 97.80. So there's still some space, a little bit of space to move upwards. Okay, not very much, but then 97.80 is your psych level, because it's the 80 psych level. Okay, so yes, it's got some movement to the upside, US dollar index, but let's look into trend as well. Pattern wise, okay, it has gone down, it has reached that area, but again, now we're still looking at possibility of prices moving upwards again for the US dollar. Okay, index, US dollar index. Let's just erase that. Okay, we've got all that cleared out. We've got in within that that wave 5 we've got a lazy Z pattern. Then you've got, on a large scale, got that W-like pattern here. Okay, so what's the answer to the question of whether or not the dollar index is to the upside or downside? Okay, here itself in the 4-hour chart. Okay, let's just do something. Let's start from the basics. Okay, in terms of trend wise, as you can see that trend wise here, on a smaller scale, we've got a shoot up of prices to the angle of a 12 o'clock type trend. Okay, as you can see, it's all the way upwards, pointing up to the sky, and that's a very strong upward move. Okay, so that could be a reaction, a knee-jerk reaction for the prices to go upwards, and that's basically looking into prices based on fundamentals, news, things that have actually gone on with the emails in the news and all that, and that's basically that knee-jerk reaction that we're talking about there. So you could see that that's a news type movement that have actually happened. Now that big movement here, that angle there, for example, is sort of a 2 o'clock towards 1 o'clock type angle. So that is still giving us hope to the upside for the dollar. Okay, and now we're talking about the dollar index at the moment, not the USD versus another pair. Is a USD in comparison to 6 other currencies. Okay, this is what the USD index is about. So you've got 4-hour chart right there. Okay, so here itself, let's just look into the waves and everything else. It does look like prices is finding some resistance right there due to the what you call entanglement of the 3 lines right there. Okay, so let's look into shorter time frames. Let me just erase all drawing right there. Okay, let's zoom in a little bit. Now, what's going on here? For example, the 30 minutes chart here, we have got prices pushed upwards, and it's a very nice support here because this gives us a sign that they've got more buying power to the upside for the 30 minutes chart itself. Okay, and that's giving us a support area right on the 200 exponential moving average, which is a good sign. So we're looking into more upward side movement. It's all free in this area, meaning if you look to the left, okay, from this area here, okay, to around this area here, this is a very clear space, meaning there are no, it's not been, how do you call that, polluted by any significant support or resistance. So what that means is if it does go past this resistant area here, then you've got a nice clear upward sort of move that may not be disturbed at all by anything major, because here itself is a clear indication. Okay, not above there, of course we've got some support and all that there. All right, but look at this area here, it's quite clear. That was a clear move down, so this will give us a clear move up most probably. Okay, if it does move through there, and it does look like the market is heading towards that way, because it has found support here, but that's only based on that 30 minute chart. So let's look into what's going on with the 1-hour chart right there. Let's just, now as you can see, you've got it found on the 1-hour chart, it found very strong resistance there right on the dot of 200 moving average, and again prices has found support as well. So that is again a very good sign. Most recent is a strong support here. That strong support was with a rejection candle to the downside. That's a good thing, and with that it found support onto that 100 exponential moving average, which is fantastic, and now it's got a nice move upwards. Okay, but it would find some sort of resistance at that area there where the 200 moving average is, but once we find prices push through, if it does actually, if it does get pushed through with a a longish strong bullish type candle, that would be a very good sign for it to reach high up. And again, that high up would mirror that space there, because this is where it's got a very smooth downward move, and that would also give us high probability of a smooth upward from that area to that area there. Okay, so between roughly above 97.75 area to 98.50 area. That 98.50 again is a Psych number right there. Okay, so this is what I could see based on the 1 hour chart, and it is giving, I mean, in summary, it's giving us a fresh new moves upwards again for the USD index. So more strength for the dollar, and this is what we've actually talked about as well, because you know, it's before the election, things would be that way, and it's got more appreciation of the dollar usually before the election. And let's see what happens, what would happen from tomorrow onwards after the presidential election. Okay, and this is where we want to look into a marry up between the fundamentals as well as the patterns. Okay, let's look into it. Let me just erase all drawing right there. Okay, so given you guys a bit of a idea on gold's movement, a bit on the USD index. In summary, the dollar has got a bit more strength to the upside, as we have mentioned for a couple of weeks now before presidential election. Again, we've got its fundamentals, news at play. It is still pushing prices up. Let's look at what's going on with the Euro USD at the moment, okay? Because we've just traveled from gold to USD index. USD index is a comparison to the other pairs, so that would give us an idea that USD is stronger to the majors, and that does include the euro too. So let's look at whether or not we see selling pressure in the euro versus the US dollar, because USD or the US dollar is seen to have better strength to the upside. Okay, so let's look at what's going on here now. We start off with the 1 hour chart right there. Okay, now we're looking at the Euro USD here. We see that it found some resistance right there, but seem to be a bit of an uncertainty going on with prices in between all these three lines. The three lines, the 50, 100, and 200 exponential moving average. Now, once prices have actually entered that zone between the three lines and not above it or under it, then it signals uncertainty, or it signals slowdown of doing whatever they're doing until they would find a time to burst out or break out, okay, from any of that channel or anything similar. Okay, so this here, if I were to zoom in, as you can see, it found more resistance here, and the resistance that the euro has found against the USD was quite on the dot of that 100 moving average right there. So here it gives us again an indication. Here you've got some resistance here on the 50 moving average, and you can always take that as your A, your B, your C potentially, and then look into more chances to the downside here. Okay, so if I were to look into A right there, B here, and take that all the way down there, then I've got a potential area right there for it to break out to from that area of the exponential moving average. Okay, so if I take that one out and measure the A to B to look at the C area, that C area is at the minimum of 38.2, which is a good thing. If your C for an ABCD pattern, is best for the C point to be at the minimum of the 38.2 Fibonacci retracement. Anything below that, like the 23.6 that appears on default, I usually don't look at that, so I would only look at beyond 38.2 onwards. Okay, so that 38.2 would then give us a extension level of either 200 or 224. So I'll just add on the extra, 224 and 2618. So I've got a zone that I could look into now, and then I've got another additional line right there that's based on Fibonacci for the ABCD pattern. A way to there are two ways to predict the D point. Okay, the AB equals CD, of course, and then you want to pull your Fibonacci from A to B to look at the C point, and you match that C point to the D point. Okay, for those who are interested in learning more about the ABCD pattern, those who are new here today, you can easily send me an email at kenny@orbex.com. Indicate your interest in learning more about geometric patterns using Fibonacci ratios, and if we've got sufficient number of students who are interested in that, we can always customize a class for you guys, and we could start with geometric patterns for you guys, for those who are keen in learning more, or who would like to start to trade using geometric patterns. Okay, guys. All right. So that itself gives me that zone, as I've mentioned. So if we take that AB right there and equals CD, that was the area there, and if I do the same right there, and I've got my B to C. All right. I think I've got some questions coming through. Just hang in there. I'll be with you. So that ABCD right there, and this is where we look into the potential area, potentially a short-term sort of TP area, or even a reversal area. Okay, so let me just color that zone and get back to your question right there. Give me a second. Okay, so that's your zone that you're looking at. All right, let's look into this. Yes, correct. I'll just type that again. It is indeed, yes, kenny@orbex.com. I confirm that that is correct. Thank you. Yeah, please send that to me, and indicate your interest in the type of course or the things that you would like to learn. If it is a geometric pattern, feel free for you guys who have already as well been with Orbex clients as well, or have met me in person, attended my courses or webinars. If you guys have got any suggestions with the courses that you are interested in, feel free to email me directly and give me an indication of what exactly would be areas that you wish to learn. If these are areas that we could cover here from Orbex by myself, then I would be more than happy to help you guys with that. Not a problem. Okay. Okay, so we've got the Euro USD, as you can see on the 1 hour chart itself, having chances or opportunities to the downside. Now that is by marrying the US dollar index sort of strength, as well as the dollar strength in general, with what's going on in the market at the moment. So we've got more of a rise of the dollar in comparison to the weakening, what do you call that, position for most currencies against the dollar. Okay, so here you go, Euro USD, and then we go on to the 4 hour chart, and we could see that on the 4 hour chart itself, we may not see that clear ABCD as what we have seen on shorter time frame. And this here, I don't actually see a Z-like pattern. It may look visually Z-like pattern, but in order for us to trade that advanced Z-like pattern, I usually use or get the help of the Fibonacci to confirm that the probability of that Z pattern is indeed high. Okay, so this is what what I see at the moment here. I don't really look into the Z-like pattern here happening, mainly because a Z-like pattern here, of course, we could see it like that and there, and then potentially that's just on the visual side of it. But to reduce the risk and increase the probability, we need a movement like that, and there's no movement like that from low to high, and I have checked the Fibonacci ratio here does not meet the criteria. So there are a couple of rules for the advanced like pattern, like the Z-like pattern or the shark pattern or a couple of other type patterns. There are rules and Fibonacci list of Fibonacci ratios that I would need to check in order for us to definitely confirm that that pattern is a high probability pattern. So I'm not really trading visually or based on just visuals. It is highly crucial for me to actually look into it is highly essential for me to have a checklist to look at how probable and how high a probability for that pattern and how low the risk would be to enter the trade following that pattern. Okay, so for this one here, I'll just summarize it for you. Based on the Z-like pattern, it is not a Z-like pattern here that is actually meeting the criteria of high probability Z-like pattern here. Okay, so this gives us then but this does not mean that you won't be looking at a probability or a possibility of prices coming downwards. That's not what I mean. What I mean is that if you want to trade with the pattern, if a Z-like pattern like here, then we are expecting a bit of a upward move there. So if this is not a high probability pattern, then we may look at prices of euro going further down and not just correct itself there and go up. Okay, that's all. That's what it means. Okay, so here itself, let me just look into the other things. Give me a second. Okay, so I'm not looking at very clear Z-like pattern here, so I think it's probably best for me to move out of this 4-hour chart and look into what's going on from a shorter time perspective. Okay, we've got resistance there, resistance here. This could be seen by some, I'm not sure. Maybe a double top, potential double top. I'm not sure whether the criteria meets them with the double top type pattern, because a double top type pattern or triple tops, they have rules as well, and it does depend on what level of chart pattern type trading they are doing. Most of the advanced type pattern would have rules like geometric pattern style, but here itself, just visually, that's looking like a type of pattern close to the double top. Here itself, we've got more dominance. As you can see, it's under all three lines, so that is giving us a bearish bias itself, and you've got more, and it has more dominance of bearish type pattern. So we do look into possibility of a more downward move here itself on price action. Let's look at price action itself. If you could see here, we've got it closest to the 50 Psych number because it's 1.1057. That 57 last two digits is closest to the 50 area. So to look into confirming more bearish biasness, we would like to still wait for prices to go under the 50 Psych number by at least 10 pips. So we would need to wait at this stage to confirm that it has actually gone under the 50, like let's say 1.1040 or so. Then it would give us more comfortableness in thinking that the bears have actually dominated this market for the euro versus the dollar. Okay, so at a glance, it's got more selling power there, even in a 5-minute chart. It's the same for the 1-hour chart, but the thing about the 1-hour chart is that it is traveling at the moment, trading in between the three lines. So for me, it increases the risk area. Okay, if that ABCD pattern, I found it, let's say, under the three lines this way, then my probability goes up and my risk goes down. But here, because of that, being in the middle, I may not find it an ideal spot or area for me to actually trade that ABCD pattern. Okay, so if we've got the three lines this way, let's say, okay, and let's say the three lines or the three average moving averages or exponential moving averages are traveling upwards, and you are in an uptrend, and then you notice you've got an ABCD like that. Okay, it is definitely to your discretion to actually trade that pattern. You can apply that pattern the same way that I've taught you, but for me personally, I find it's just the level of risk involved in this, because the ABCD pattern is trading in between the three lines. So it just increases my risk and reduces a bit my probability. And I wish, for me personally, to take trades that are classified more into the high probability, low risk arena, as opposed to high risk, low probability. Okay, just to give you my idea on that. Okay, so let's get rid of that one there. And looking into the 4-hour chart, as we have seen, it does look, zooming in itself, we're looking at prices challenging that area there, and that's just on the dot of the 200 moving average here. Okay, so like I've mentioned, at this point I would suggest to look into price action and to wait for prices to go under the 50 area to meet the 40, to meet the 1.1040 area, and see what happens then, whether or not your candlesticks are represented by bigger, more powerful bearish type. And if you got more bearish type candle, longer, more powerful type candle going under the 40 area, that shows that you've got more dominance by the bears at that time, and it's a better area to look into selling opportunities at that time. Okay, at this moment of time it is just a bit too uncertain. It's increased the risk, and it's playing in between the three lines as well, so it's just the price action itself is not giving us a clear indication of a down or up as yet, but the bias is leaning to the downside for the euro, considering the strength of the USD picking up. Okay, that's basically it for our chart. If we're looking into the daily chart for the Euro USD itself, now here I would like to clear this one up here. Now for the daily chart itself, it is definitely giving us again more bias to the downside, because it's found the resistance here. Okay, and it's gone under. Prices have actually opened under the three lines, giving us a good indication to the downside, and it's represented by, I would say, strongish type bearish candle here. Okay, so hence the reason again we want to look into price action. If at all we have got that move downwards here, and then we've got that correction, and that correction has actually met the resistance at the area here, and that area there is represented by the 11300 area, 1130 area, which is quite close to the 50 area here as well. So it didn't actually go past 50, so it found resistance here, and I can actually have that as a potential C area for my A, okay, B, C, D pattern. Okay, so if I take that as my A, and then B, and then C, then the potential more on the downward move, and this is where you could look into the potential of an ABCD pattern, drawing that out, looking into the centroid area, and trade that as well on the daily chart to the downside. But again, we want prices to confirm that much more, because once prices have actually confirmed and you've got that centroid, then it increases your probability for that bearish type trade for the Euro / USD. Okay guys, so I've covered the Euro USD Index, and then we've got the gold covered as well. Now let's look into what's going on with the pound. Okay, now here itself, just before coming on to before coming and joining you guys here in the webinar, I've noticed a couple of things with the GBP type patterns. Okay, GBP type pairs. Now I've got three pairs that indicates very strong downward trend on the daily chart, especially concerning the GBP, and that's the GBP versus the CAD, or the Canadian dollar, the GBP versus the CHF, and the GBP versus the JPY. Okay, so let's go on to the GBP USD hourly forward chart first, because this is a pattern, not only a pattern, a resistance and support zone that I've monitored, and that was done some time back, probably about a week plus back, and then I see that I've got a rejection candle right there confirming more downward bias, and it is definitely GBP USD is giving us lots of biasness to the downside together with the GBP USD though. As I've mentioned, we've got these three pairs: GBP versus the CAD, GBP versus the CHF, and the GBP versus the JPY. These are sets of pairs in combination with the GBP that gives me quite a clear indication on the daily chart for more downward move. So if you guys are trading that and is interested or are interested in trading these GBP type pairs, then do look into the daily chart. Okay, not shorter time frame. These are for the longer type term trades as well, and you could easily find a big pattern there to justify a big type pattern to justify the downward move, but of course you can take that further into the shorter time frame and plan these trades as well. Now for the AUD CAD as well, that is again on the daily chart. So I've got these four pairs that I just want to give out to you guys because they are giving quite clear signal to the downside on the daily chart. Okay, so give me a second, let me just check on my mobile here as well. Okay, so and you've got rejection candle here is again is confirming that downward bias for the GBP USD. Okay, on the daily chart here as well, you could see that I've talked about this last week. I think it was last week's Monday, and I did indicate to you guys that there may be a probability of a pole and flag pattern, a bearish pole and flag pattern. So what that means is we've got this channel here to the upside. Now that channel upward move, I think I've got some question as well. Give me a second, guys. That channel, upward type channel there, okay, maybe your flag type pattern, so that downward break could equal the length of that pole, okay, from there right to there, from there right to there. Okay, so that length there, if it is let's see from the body right to this area here, let's say we're talking about, that's quite a number of pips. That's 1,000 plus and 2,000 plus pips, but we want to trade that in stages. We don't want to get too excited with it because you've got big moves down expected. You've also got correction, so we would need to be careful with that. Hence the reason I like to take it, look into it as a pattern, so we can write that pattern and expect corrections and then write the pattern. Okay, so yes, we have got, oh, right. Testing 1 2 3, guys. Can you guys hear me okay? Let me just check that. Let me type. All right. Adam, you're confirming that you guys can hear me, yeah? All right. If you guys could also confirm, because I've got London, RT London there. Okay now, RT? Brilliant. Good. Okay. Good. All right. Thank you for that, guys, for confirming. Okay. So yes, here itself, I mean, you've got that flag and then pole downwards. Okay, that was on the 4 hour, let's see, daily chart, sorry. And again here you've got downward move, upward pattern, downward move. Okay, so this length here, if we take that there, that is, look at how close it was to this move here. Okay, let me just confirm that. Thank you. Okay, good. You guys can hear me, yeah? Brilliant. Okay, so here itself, as you guys could see, that if I measure from that top there, let's say just the from that top right down here, okay, and I would like to then draw the flag area. Okay, let's see the flag, because we've got a flagpole pattern here. Let's see. That's not very clear. Okay, let's say that one here, and then okay, let's say something like that. So that's the flag area right there. Okay, now this flag area could also equal, I mean, it would reflect what people talk about. People say that they trade the breakout, so that breakout right there. Okay, so usually the longer that trend persists sideways, the bigger the breakout is. Okay, but another thing as well is you have got a breakout that happens like that, and usually it returns back to where it has broken out from, and only then it makes a bigger move upwards or downwards. In this case, downwards. Okay, so you've got the A, B, C, D. You could see it that way, but that's a pole and flag pattern, and that flag basically is price is going this way, and now it's gone downwards. So here itself, that length there of the pole usually does mirror that length there, and that's what we call a potential pole and flag pattern. You can easily type that onto Google as well and look into it. There's not much mathematics involved in there, meaning not much of a formula or anything like that. But I can always send you something here that you guys can take a bit of a screenshot if you wish. Let me just look into this. This is talking about flagpole pattern. So, let me see whether I could find it here. I know my my desktop's a bit messy. So we've got a formula here, guys. You guys can actually, this is based on the flagpole pattern, and you've got a bit of a formula here if you want to use this formula. And with the flagpole pattern, you can also look it up and use it as though you're trading in ABCD. But the only problem with that is you would find it a little awkward having the prices going sideways, making the flag of the flag part of that pattern. So here you've got the uptrend type flagpole pattern and a downtrend. And what usually happens is that you can put all the prices and have mathematics into this formula, and you can then simply find the prices. So you find the low price. Now here, for example, we found this to be let's say this is a bearish type pattern, okay, because it started with a bearish pole. If it starts with a bullish pole, then it's a bullish flag pole pattern. So this is a bearish pole flag pattern. Okay, so here itself, what you do is you look into the formula again and you look for the bearish. So this is the downtrend type pattern. Okay, so you need to look into the high price of the flag. Now the high price of the flag is right there. So let's say you've got a high price right there. Let's look into the price. Okay, so you got high price right there, 15013, let's say. So you type that out and you put it as 1.5013, correct? Oops. Okay, not sure whether I got that right. Let's see. 501, or let's say 5020. Okay, let's take that as 20. Okay, there you go. All right. Okay, I'm just teaching you guys on how you can actually put in simple numbers and prices onto a formula for a pole and flag pattern type trading. Okay, so the reason why I would like to show you guys this is because of the event risk events and things that we are expecting in the market. You'll probably look into a market that has got loads of flagpole pattern, so you might want to trade it. Okay, and it's always good to learn something new. So here, if we are going to the downtrend, as I have given you the high price of the flag, you need to minus that height of the flagpole, in pips. Yeah, in pips, and then the height of the flagpole, and then you multiply that by 47%. This is just a formula that is roughly what I use as well sometimes, if at all I'm trading the flag and pole pattern. But I usually marry the flag and pole pattern with the other geometric type pattern. So if it's a downtrend, you multiply that by 47%. So what you would need to do first is always take the height of the flagpole in pips, okay, and multiply by 47%. Okay, let us just do this very quick mathematics here. So you've got the height of that flag, okay, that pole. So you could take that pole from the very top to the very bottom here. Okay, so if you want to be conservative, you can easily take just that flag pole there. It's entirely up to you. Okay, you can take it right there as well. Okay, so if I take from there to here as the pole, then I'll just stretch that all the way down here and look at the number of pips, and I've got, let's say, if I'm not wrong, 2224. So we've got 2224, let's say. That's in pips. Okay, so you multiply that by 47%, right? So let's do a bit of mathematics. The calculator, please. Yeah, sorry guys. And so if you've got like 2224 pips, let's say, if you want to just take that safely, just go for the, okay, 2224, then you multiply that by 0.47 or 47%, you've got 1045, right? So 1045 1045. Okay, so it's okay. And then once you've got that number 1045, what you then do is, oops, you've got it there, high price of flag minus that pip. So the high price earlier on of the flag was there, 15020, correct? So 5020. So 5020, if I'm not mistaken. No, I think what you've got to do is that price there. This is what you would need to do. Give me a second. Let me adjust that a little bit. I think high price of flag, not high price of pole. Okay, that's my mistake. So not that price there. Sorry, guys. Okay, yeah, it's my mistake. High price of the flag. So high price of the flags there. We'll take that price here. So that was at, second. Oop, there you go. So you've got it at 3480. Let's say. Okay, so 3480. Okay, so you minus that 1.1045 earlier on. Okay, so let me just draw that. 1.3480. That's your price here. Okay, and you minus 1040 pips, right? There we go. Okay, so you will get 2440. Okay, right? So that's 2440. So what you would then need to do is 24. It's given you some amount right there, so that was your target type price. So it did actually match to some extent between the price there and the price there of where it actually reached roughly. So that's not too bad. You can always take that again. Give me a second. That formula here, let me just clear that out and give it a shot. You can always see it as a ABCD type pattern as well, or to keep it very simply, you can always double click that all the way down here and you could do that. Okay, or the other thing is what I usually do is I like to trade conservatively, increasing my probability. So I'll just take that single sort of candle that is the most prominent one. If it's the most powerful one, I take that and I do it that way. Okay, I'll take that from the highest price of the flag right there, take that, and it's almost like A, B, C, D kind of thing. Okay, but pole to pole, so I equalize that pole to the pole and I see that that is where it arrived to anyway. Okay, so it just extended that a little bit there, but then it was not too bad at 1752. Okay guys, so that's basically it for the GBP USD on that one. I've given you the pairs to go along with the GBP USD, GBP CAD, GBP CHF, and GBP JPY to all look at the downside. So perhaps you want to look into flagpole pattern in these pairs or for these pairs as well. Okay, because we're driven by a lot of event risk, so we're looking into quite a number of pole type flag type patterns as well, but it's best to look into pole flag pattern when you've got a single candle like this, as well as other patterns, but always with a single like pattern. And it's good when we've got inventories like given like the NFP and various others, then you would look into lots of possibility in that area. But again, it's not a super high probability type trade compared to geometric type or harmonic type pattern. Hence the reason you would need to be very clear on the trend and confirm that with other type patterns before you use this formula for your flagpole pattern. Okay guys, all right, so we've covered the GBP USD. I've just got something with the Euro GBP as well. Okay, so I would like to visit Euro GBP. Reason being, we'll cover that in a minute. The reason for Euro GBP is because we've got a couple of signals in terms of patterns, especially they have given us some trading opportunity to the upside from the short term to the long term. So that is giving us some strength for euro. Now that's funny because we've got most of the GBP dominance, the dominance for GBP is to the downside, but when you combine the euro to GBP, we'll still find strength for the euro compared to the GBP. Okay, so here itself, let's just look into uh, euro GBP right there. Let's look at whether or not we've got some opportunities here. Now you've got some pole flag pattern like this. Okay, pole flag pattern, usually you've got a single type candles, let's say, moving downwards, then you've got prices like moving upwards that way. So you take that upward channel as your flag, and then you equalize that length to that length, okay, downwards. All right, and you usually start that length there from the highest point of the flag. Okay, highest wherever the price is the highest in that flag. So that's your flag pole pattern. So we'll do that if we'll do that together if we do find a potential. So here itself, let's look at the trend side of things on the Euro GBP. Just with the 1 hour chart itself, let's see. We have got prices finding resistance. 1 hour chart gives us strong type resistance there, meeting the moving average right there, the exponential moving average, and then you know, coming downwards, it's found again some more support, but we would need to look into whether or not it would find resistance again to look into the downside of things. But here on the 4 hour chart itself, we have got sign of support because it has met it found support at the 200 moving average right here. But what it would need to do at this moment of time is to go above that area right there, above the 3 moving average and above the Psych number. Now prices is at exactly on the dot here, or not really on the dot, but 8910, very close to the 20 Psych number as well. So we would like prices to go further up beyond the psychological number of 20, so 89.20 and above, like 89.30 or so, and hopefully above these three exponential moving averages, and then it would give us much more potential to the upside. Okay, so here it's a matter of waiting as well. So I think I've got some questions here. Give me a second. Oh, sorry about that. Okay, let me just adjust the sound. Is it clear now, Ubay? Can you hear me okay? Testing 1, 2, 3. Sorry about that. Not sure why, but hopefully it's okay now. Okay, good. Thank you, guys. All right, so this is for the Euro GBP. So I am looking at potential upside move, but again, I wouldn't do anything until it goes above all 3 lines and above the Psych numbers as well to give us some push, because comparing the euro to the GBP is way weaker, so we are looking at potential upside movement for the euro, okay, versus the GBP. So here itself, let us just Adam, you're okay? Okay, clear now, Ubay? Fantastic, that's brilliant. Thank you, guys. Okay, so erase all drawing. Let's look into the daily chart here and see what's going on. I mean, it's not giving us, you know, really clear a sort of entries, probable entries and all that as of now, but it may actually come up to giving us that opportunity, but not just yet. You know, we would need to wait potentially for that to happen. So hence the reason, try looking into the price patterns, not only that, but price action, especially beyond or above the Psych numbers would probably be much better. Let's just look into that. Now the daily chart, oh, I think I've clicked something not really right here. Give me a second. Okay, so daily chart. Daily chart, as you can see, if I do that, you could see that the angle itself is super strong. Okay, so indeed we have got on the daily chart something good to the upside. Okay, so hence the reason you want to look into potential patterns. Okay, here at a glance, let's just do that. Um, At a glance here, this small area here, there may be a potential bearish, bullish type A, B, C, D, bullish type, not A, B, C, D, bullish type Z-like pattern here. And this could actually be seen here, okay, all the way up. So I would expect some movement down, similar in length with A to B, and then a shoot up. Okay, so that, if we're looking at that happening, and if it does happen, then the possibility of that happening in terms of the support would be at this area, which is again coincidentally where the 50 moving average is, and that will provide a nice support upside. So let's just wait a little bit more for the 89.09 area to go lower than the 89. Perhaps the 89.00 and low would give us a bit of an idea whether or not it will go further down, but if not, then it's got chance to again go upwards, okay, for the euro. So I do see a potential to the downside, just very minimally, and then upward move, because here if we're looking into the ABCD Z-like pattern, then I'm looking at a ABCD down here as well. So that's a very good sign, because usually the C to D would move in an ABCD type format. Okay, so let's treat this as an ABCD type pattern to the downside, so we can get a bit of an idea of how far would it move downwards to before it make that move upwards. Okay, so if I double click that, move that here, I get this area here. If I do that with the ABCD pattern, AB equals CD, as you can see, AB, okay, equals CD, you can see that it's there, it's on the dot of the 50 moving average. So yes, some small movement down, but you should be ready for an upward or long opportunities here because of the Z-like pattern. Okay, and if I take that up, you could see that it met 200 moving average just on the dot. And if I take that length there, then I've got this area here as a potential area it could go down to as well. And if I use the ABCD pattern by pulling A to B, and I look at my C, that's 61.8, so then I project the D by pulling the B to C towards the 1.618 area, and that is right in the middle right here, and that gives me a nice zone as well, okay, of where prices could find reversal, and it's your potential take profit zone as well. So let's take a look at that area there, and we can always confirm that later on, just to look into what prices, how prices would react to that area there where they will find support. If it does find support onto that 50 and find support and go above the Psych numbers as well, then you've got a very high likelihood of that Z-like pattern to actually be a successful bullish Z-like pattern. Okay, so that's for the Euro GBP on the daily chart. So I do see some bullish or buying opportunity for the Euro versus the GBP on the daily chart. Okay, so if we go into the 5-minute chart, on the short term, we don't really see that going on here. Perhaps it's a correction, so we would see on the shorter term more selling opportunities for the euro, but on the daily chart or longer term, we do see a potential buying opportunity for the euro. Okay, so this is it for the euro versus the GBP. Now here we could again, we could see on the 5-minute chart, lots of selling pressure. You could take that as your A, your B, your C, and then project that downwards. Okay, but on the bigger picture, this could potentially be your A, B, C, D, but an M-like pattern as well. So here we've got an M. If at all it's an M-like pattern, that is a bullish move. Okay, so that means that could go down to this area here. Okay, potentially, if the selling pressure persists on the 5-minute chart, shortest term, you could see that prices could for as long as it goes further below the three moving averages and then under significant psychological numbers, you could see it potentially giving you that move to the downside. Okay, and if we go on to there, right, that's your ABCD right there. Okay, there you go, A, B, C, D, right? And that move before that, a big rally upwards would complete that as an M-like pattern, and usually M-like pattern would find a PRZ area as well below here, the D area. Okay, so you could treat that as an ABCD first, find your potential reversal zone or your potential D TP areas first, and then you pull your Fibonacci from here all the way up here and look for your 78.6, 61.8. Now, I wouldn't look into that, that's just too far above, so I'll just focus on my 78.6, and I'll also pull X to my C area as well and look for the same 78.6 right there. Okay, and I'll proceed to looking at where my C was, A to B. C is at 50, so my D would be about 200%, okay, or 2.00. So I'll take that and look for my 200%. So I've got 200% there, and I like to keep the zone close as well. So I've got that line and all these other lines here. Okay, so that this zone on the 5-minute chart would be my take profit area. Okay, so I'll take that. I'll mark that out. Okay, and if I zoom in a little bit there, and for you to find your ideal entry, short entry area, you could always convert that into a geometric pattern by having that drawn and look into it's coming close. So you could see that this centroid area meets the 200 exponential moving average as well, and it's at 8903. So you would need it to go under the 8900 area, below the 8900 area. Okay, so you've got 88 something below. Okay, so you would need 8900 and below the 900 area. Okay, and that would then ideally give you an area for you to enter, your probability to enter a short trade for the Euro GBP based on the 5 minutes chart. So nothing should go on as yet right now, because you would be trading to the downside, if at all this is a downward sort of potential, only after prices have gone under that 8900 area and below. Okay, as you can see, nothing would have happened if you have, done that entry to the sell, have not done that sell entry, because it's based on that centroid area. Okay, so let's see the progress of that in the Euro GBP there, but then overall I'm more comfortable to a upward type movement for the Euro versus GBP, as I see more a downward potential for the GBP. Okay guys, so that's basically it. We've covered a few. Let's just very quickly go on to some requests with the silver as well. Now silver, it's usually a pair that would mirror the movement of gold, but 3 to 5 steps behind. That means the big movement that is done by gold, it would take some time for silver to catch up, but once silver does catch up to that same direction of gold, it would then be many times more. Okay, potential. Okay, so here itself, as you can see, it does mirror that movement of gold, because we have got sort of a similar type ABCD type pattern here. We've got the same that goes on with gold, so it is similar for gold, for silver, for prices to actually depreciate first before it finds a nice support level or area for it to rise up or create a rally. Okay, other than that, now this one here is just a pattern that was drawn some time ago on the euro versus the AUD. So I'm expecting again for this Z-like pattern, but it would need to create an A, B, C, D first. So that I presume is the potential C area. A, B, okay, and then C, and once it does that, then you have got room for prices to push up or rally towards the D area here. Okay, so that's a Euro AUD. All right, so that's basically it. So I would like to now, I know we've gone for quite some time now. Perhaps it's best for us to wind down a little bit, but with some questions from you guys. Have you guys questions based on the trades that you have at the moment, or any questions about the market in general, or specific pairs that you would like to know before I do a wrap up on this Monday's webinar? Okay, guys, so you guys are okay so far? Yes, there are no questions. I don't see any questions just yet. Brilliant, good. So that's good. So what I will do is to wrap this up here, guys. I would like to thank you guys for attending today's webinar. For the ones who are new to this or new in joining me live, we've got the next one coming on Wednesday. So Wednesday is a live webinar meant to troubleshoot your trades, and it's meant for live account holders. So if you're not already a client of Orbex, feel free to activate your live account, and you can then join me on Wednesdays and get all the recordings sent to you. All these recordings, including today's and previous ones, could be sent to you upon request once you send me an email, and this is meant only for live account holders of Orbex. So feel free, if you do want to take advantage of that, send me an email at kenny@orbex.com. So Wednesday it would touch into troubleshooting your current trades. We've also got open request on the type of patterns that you have, and whether you would like to checklist that with me to look into how you have drawn the geometric pattern. So it would very much be like a tutorial plus a troubleshoot type session, because we would also look into failed patterns, why it fails, and look into learning from these patterns as well for upcoming trading opportunities. Okay, so it will be very interesting, of course. Not only the Monday ones, but the Wednesdays one to look straight into your current trades based on your live accounts with Orbex. Okay, I think I've got some questions here. All right, thank you, RT London. Thank you very much, guys. Thank you, everyone. I would like to say a big thank you. Have a very good evening, and send me an email if you guys have got any questions as well. Kenny@orbex.com. So have a very good evening, guys. Thank you very much. Bye-bye for now.